Hello, YouTube. Today we're going to talk about this hated rally because I think a lot of people don't believe it. And I want to know whether or not you do, because there is a simple pattern we can look at, which is our uptrend, which formed the beginning of March. And what is it doing? Well, it's holding. We also have that inverse head and shoulders, which we pointed out going into the end of the month, and the rally higher. We have that exact same thing formed here on our seasonality chart, which we have gone over before. So let's make this really simple, because I think with emotions high and people unsure what to do, a little bit of clarity can really go a long way. So there is our inverse head and shoulders, and we do have our uptrend. So as long as this uptrend holds, where can we go? Higher, and then form higher lows into where? May, June, July. That's what normally happens. 7 out of 10 people on Twitter do not trust this rally. 3 out of 4 people do not trust this rally on YouTube. Thank you to everyone who completes it. And even Jamie Dimon, the biggest banker in the world, says that the banking crisis is not over and will cause repercussions for years to come. So what happened? Well, from Friday, we went from 38 on fear. We went up to 60 yesterday and right back here to the middle at 50 today. So emotions are very high. And with this green backdrop, I think a very simple story is the one we want to focus on today, because it appears that we're not sure whether good data is good or bad data is good. Initially, after we got this JOLTS job opening numbers come out, we went higher, but then we faded the day. And there's a few key things we're going to look at. So we know that gold is up dramatically today, over 2,000. It's 2,040 right now. Bitcoin is up. Ether is up. But the one making the fresh high here along with Ether is gold. It is continuing to power up. Pop flag, pop flag, pop. The volume is dropping off, but there's no one really fighting it. So that's really notable to me. Also notable that we have regional banks down again today. Why? Well, Jamie Dimon just said that this banking crisis is not over. So this is the focal point, or where there was a lot of pain in the sector, meaning banking. I'm going to ask you for a huge favor before we go further. Please and thank you. If you could, consider smashing that thumbs up and subscribing to the channel if you're enjoying the content. It goes a really long way to support our channel and would be a huge favor to me personally. So let's try to think about this. Yesterday, we talked about being like water, or like what Bruce Lee said, where we are formless, shapeless. We just look at the chart and we try to understand what the market is telling us. So let me just go back here to our seasonality chart, because this is a story that is like so easy to tell if we are receptive to it and we know what basic trending is. So one more time, if we continue to trend higher, I think that is a clue for us to be watching. So if you look back here to S&P on our one-day chart, let me just get my lines back here because I want to make sure I don't lose them. Sorry for not having this ready ahead of time. If we look here very objectively, if now we understand that the high that we established here going back to January and February, that's basically this yellow box that I have outlined here. So we have our yellow box, which identifies the highs we put into January, which were already over, these highs here into early February, and then the one that we formed in March. So the March high that we're trying to claim right now as we go higher, that's the one we're just looking at. Then we have the Feb high and the Jan high. So if we look at those a little bit more closely, what do we note? Yes, that was the potential for our head and shoulders with a bearish engulfing daily candle. Yesterday's low was 408.44. So we closed just over it. So technically a bullish engulfing candle, but not ideal by being above yesterday's low. Was that it? Was that the bearish news? Jamie Dimon says, oh my God, there's going to be years of pain ahead. Gold's up, stocks are down, yields are down, VIX is up. But if you didn't know, you'd be like, man, S&P is down like 0.5%. Does it really matter? Well, that's the question. If bad news can't take us down, meaning there is no follow through tomorrow, what could good news do? Well, that could take us like a lot higher. And right now, everyone is pessimistic. So in terms of the charts, let's keep the story simple, because that's what I like. I like a simple story. The bear was this red downtrend where every single time we hit it in previous dead cat bounces, reject, reject, reject. This time we didn't reject. We got a breakout, we got a back test, and then we got to move back above our 200, move back above our 50, and we have an uptrend, which means we back tested and passed our breakout area, and now we're actually trending higher. Stocks can do 3 things as a reminder. They can go down, they can go sideways, or they can go up. And right now, it appears like it's trying to go higher. But for us to discover a new range, or for price discovery higher, what do we need? Well, we have to make sure we, first of all, keep going up. which means we pass this uptrend. I want to see it pass here at 410 going into Friday the 14th, which is going to be next Friday. So if we go sideways, that's perfectly fine because we're still going up. There's still mostly green volume on the one-day chart here ever since we got our capitulation low. And as it's noted here, it's like really simple. So let's make sure the story gets simple here because I think a lot of people are getting chopped up in the emotional volatility. So if we remain above the previous highs, so again, it looks like a head and shoulders, but then when it breaks out, it's not. So if the uptrend holds, and at least for this week into the beginning part of April here, we look and see that we're popping over the flag. Let's just be aware of it. I think we're about right here right now. Technically, seasonality, we're right there. The beginning of April, right around those relative highs, and no one believes it. So what can we do? Well, if the pattern holds, we can go higher. So we go up, form a higher low, and then just advance. Again, this is all depending on whether or not nothing happens right now. And we talked about the bearish narrative before, meaning the Bear Stearns timeline on the weekend. But let's look at this larger pattern, which is still forming here. There is a W. We do have like a, I don't know, it's really just going sideways here. So we're not really going down anymore. We're going sideways. We're at the upper end of that range, which means resistance or those Jan and Feb highs. And if we look here to our weekly chart, yes, we're also at the 2018 to 2020 all-time high connect. And the other part is that we're already up about 20% off our lows. So from the lows in October to where we hit in early February, that's 20%. Now what we're trying to do is form a low, higher low, higher low, high, lower high. So at a very high level, if we try to just understand what is happening on the chart, we're forming higher lows, and then at least short term here, lower highs. That means a consolidation range. It's like a coil that gets really tight. The range gets smaller, and then the coil explodes. Volume is usually the clue. So the volume, after the coil gets too tight to hold, explodes. And that's what we're looking for here. So we're looking for the birth of the new bull market by S&P getting above getting up 20% off its lows to get to 417.8, or that current red line, which roughly aligns with our January highs. So again, we're not going to go higher, meaning 420, 430, unless we can reclaim those relative highs, which is what we're trying to do right now. If we look over here to QQQ as well, what's notable for me is that it's still rocking that uptrend. So just like we were looking at yesterday, what we have to pay attention to is the pattern. So let's have a look here. Why? Because yesterday we were talking about expansionary territory. So let's go back to hollow candles. Let's remove everything. And we note that we have low, higher, low, higher, low, higher, low, higher, low, higher, low. And then yesterday, the inside bar. Well, even though we closed red, that inside bar broke bullish today. Why? We have a higher high and a higher low. So tech is still leading the rally. It is still dragging us higher, and banks dragged us down today. So as long as QQQ remains solid, and we note we're right on the uptrend here, so I'm not sure what's going to happen tomorrow, but let's pay very close attention. Why? Because going sideways for QQQ just means a higher risk of having to go back down to test what? Those same highs, the February highs, those Jan highs, and that would be roughly 310 on S&P. Sorry, on QQQ. So now going back here to QQ or S&P on the 1 day. Yesterday we had low, higher, low, higher, low, higher, low, and we had the higher highs as well. Well, today we have a bearish engulfing, which just means that there's rotation happening right now. So I don't want to confuse the story much beyond what I just laid out. We could look at the dollar, we could look at VIX, we could look at gold, but I think that reading between the lines, I think it is very clear what is happening now. And if you want to watch more, I laid a lot of this out on our weekend deep dive, which is now queued up here on the left-hand side. Thank you so much for watching, and I will look forward to seeing you tomorrow. Thank you.